Hi, everyone. My name is Ariana Michner. I am the current Vice President of Membership for BAP, and I'm here with one of our tutoring directors, Katie. And we're going to be doing a demo of all of the handouts for your Accounting 350 class. So starting with handout 1, we have trial balances, basically wanting to put these errors that this company made on the correct debit or credit side. So first, before we start the questions, I just want to do a quick overview of what has a normal debit balance and what has a normal credit balance. So when looking at our assets, all assets have a normal debit balance. And when looking at our liabilities, all of our liabilities have a normal credit balance. And when it comes to equity, it gets a bit more complicated. So the four things that we have within our equity account are our revenue, our expenses, our dividends, and our common stock. So our revenue has a normal credit balance. Our expenses have a normal debit balance. Our dividends have a normal debit balance, and our common stock has a normal credit balance. So if something was put on the credit side when it should have been on the debit side, we need to subtract it from the debit side and add it to the credit side. So let's get started with our questions. So number 1 says, the cash account balance of $32.40 was listed in a credit column of the trial balance. So cash is an asset, and if it was listed on the credit column, but should have been on the debit column, we have to do something to fix that. So number one, so we're gonna have our debit and our credit columns. So if it was a plus 32, well, no, they had it on this side. And so we have to subtract it from this side and move it over here and add it on the side that it should have been on. So that's going to be the answer for number 1. Now, number 2 is the unearned service revenue account balance of $2,500 was listed in the debit column of the trial balance. Unearned service revenue. This is not a revenue account. If it's unearned, that means it's a liability. And if we look here, all of our liabilities have a normal credit balance. And if it was listed on the debit side, we have to take it out of the debit side, subtract it, and add it to our credit side. So number 2, we need to subtract 2,500 on the debit side and add 2,500 on the debit side. Moving on to number 3. Payment received from a customer was debited to cash and credited to accounts receivable for $680. The actual collection was for $860. So let's see first if the journal entry was correct. They received payment from a customer, they debited cash and credited accounts receivable. That's correct. So they had an AR account balance, but now the customer is paying them back for that. So they need to lower their AR and debit the cash that they got from them. So the journal entry was correct. It's just the number that's wrong. So when we go here, let's find what that difference is first. So if they did it for 680, but it should have been 860, we need to add 180 on into both of those accounts. And cash and AR have both debit balances. So when we debit cash and credit AR, we're going to add 180 on the debit side for this cash. But when we are crediting something that has a normal debit balance, we keep it on the debit side and do a minus 180. So even if you're debiting something or crediting something that has a normal debit balance, you keep it on your debit side. It's just a matter of if you add it or you subtract it. Moving on to number 4. The purchase of a computer on account for $1,500 was recorded as a debit to supplies for $1,500 and a credit to accounts payable for $1,500. So this problem seems like they did it correctly, but there's one small thing that they did wrong. When you buy a computer, it's not really considered supplies, it's more equipment. So the debit to an asset was correct and the credit to accounts payable was correct because it was on account, but it was just the wrong asset that they debited. So if we look at the journal entries, we'll put the wrong entry in red and we'll put the correct one in black. So they did a debit to supplies for $1,500 and a credit to AP for $1,500 when it should have been a debit to equipment for $1,500 and a credit to AP for $1,500. So this part, credit to AP, is correct. We just need to fix which account it's going into. So number 4, we're going to take $1,500 out because we put it into supplies when we shouldn't have. This is the supplies account that we're taking it out of, and then we're going to add $1,500, and that's putting it into the correct account for equipment. Moving on to number 5. Services were performed on account for the client for $690. Accounts receivable was debited for $690, and service revenue was credited to account for $690. So looking at the journal entry, services were performed on account, which means they're not getting paid yet. So the debit to AR is correct and the credit to service revenue is correct. It's the numbers that are wrong. So the debit column was debited for the correct amount, just they forgot to put a 0 in the credit side. So let's find the difference between these two numbers and see how much more we need to credit into service revenue. So number 5, we'll move this. Oops. So it was 69 when it should have been 690. So we need to add 621 on the credit side. So all we need to do for this problem is do a plus 621 on the credit side. Number 6, a payment of $650 for utilities was recorded as a debit to utilities expense for $650 and a debit to cash for $650. So here they debited their expense and they also debited cash, but really it should have been a credit to cash because they paid it. So that was their mistake. They debited cash when they should have credited it, but the debit to utilities expense for $650 was correct, and both of the numbers are correct. So what we need to do here is they added to the debit account when they should have subtracted from the debit account, right? They debited cash and increased that asset when they should have been lowering it. So first, we need to do a minus $650 for the cash that they increased, and also do another minus $650 because they should have lowered that account. So this is bringing the balance back down to 0, fixing the mistake, and then this is doing the credit to cash that should have happened. Number 7, when the unearned service revenue account was reviewed, it was found that $725 balance was earned prior to December 31st. So when unearned revenue has now been earned, there's an adjusting journal entry that needs to happen for that. It's going to be a debit to unearned service revenue, which I'll write. We're going to debit unearned service revenue because now it's not unearned anymore. It has now been earned. So we need to credit revenue. So that amount is for 725. So unearned service revenue has a normal credit balance, and revenue also has a normal credit balance. So when looking at the debit and the credit columns, we need to lower the unearned service revenue account on the credit side. So that's going to be a minus 725. And then we also have to increase our revenue account that has a normal credit balance. So we need to do a plus 725. Number 8, a debit posting the salaries expense of $950 was omitted. So they just forgot to do a debit to salaries expense for $950. All expenses have a normal debit balance. And so we're just going to do a plus $950 on number 8 on the debit side. Number 9, a payment on account for 306 was credited to cash for 306 and credited to accounts payable for 360. So the correct number that we should be using is 306, but it looks like here they credited cash and they also credited accounts payable, and it was a payment on account, which means they should have debited accounts payable and credited cash because they made a payment, so they should be debiting their cash when they had a liability that they're now paying off, so they have to debit their account payable to lower that account. So let's see what happened here. So first, let's fix this credit to accounts payable and then do the correct entry of debiting accounts payable. So they did it for 360. So on the credit side, because we're taking care of accounts payable, we need to subtract that 360 that they increased it in the first place. But now when you debit accounts payable for the correct amount of 306, when you debit something that has a normal credit balance, we're going to subtract it on the credit side. So this is fixing their mistake of the credit to accounts payable for 360. We're lowering that account back down. And we also need to debit accounts payable for 306, which they should have done when they also credited their cash. And that's this one. All right, number 10. At the end of the year, Alpha's board of directors declared a dividend of $1,000 to be paid next year, but the dividend was recorded as a debit to salaries expense and a credit to cash. So this is very wrong. When you declare a dividend, the journal entry for that is not a debit to salaries expense and not a credit to cash. So let's first write down what they did wrong. They debited salaries expense for 1,000 and credited cash for 1,000. So let's think what the journal entry is for when you declare a dividend. You're going to debit dividends, and you're not paying the dividend out yet, so you're going to credit dividends payable, and that's also for 1,000. So when going to our trial balance, let's fix this first and then add in what we should have done. So salaries expense has a normal debit balance, and if they debited that account, they increased that salaries expense account when they shouldn't have, so we need to take that out. We're going to do a minus 1,000 for that. Cash was credited. Cash is an asset and has a normal debit balance, and they decreased that account when they shouldn't have, so we need to add that $1,000 back. Now let's take care of our dividends and our dividends payable. Dividends have a normal debit balance, and they were never debited in the first place. And so we need to add 1,000 for that. Dividends payable was never recorded, and dividends payable is a liability and has a normal credit balance. So we need to add that on the credit side. So now that you have all of your errors fixed, you take your incorrect totals you add, subtract all of these things on your debit and your credit side. So you take your debit number and your credit number, and you add, subtract all these things, and then you should now have matching numbers on your debit and your credit side.